I think what's interesting about the NASDAQ is I would agree with that in the short term, that right now, though, the NASDAQ is in a cyclical correction within a secular bull market. And just to remind viewers that we are in one of the most powerful industrial revolutions of our time that got interrupted by a pandemic and now amplified by it in terms of how we consume, operate, and work in this economy. And technology will continue to lead the way. Now, that said, within a cyclical correction, you want to be selective going forward, but the themes are completely intact. And with regard to the Fed, we know the Fed's going to continue to hike rates. What's amazing is we're already 10 rate hikes in. We seem to be kind of hitting peak inflation. 90% of S&P companies have reported, 75% have either, beaten or met expectation. And we still have $2.5 trillion to go in terms of cash balances. And so there's a lot that's working in this market. There are only a few worries that are left. And that has to do with the Fed's overshooting, or if maybe we go into a recession, and obviously geopolitical. But you've got to decide which camp you're in. You're going to invest in what's working, or you're going to continue to hold cash and fret about what you're worried about.
Which camp are you in, Sherry?
I'm in an investing camp. As a senior portfolio manager, I'm always forward thinking in terms of how I'm structuring portfolios. But, the economic data and, a lot of strategists are good to tell us the climate that we're investing in. But we need to move forward as, as investors, and people sitting in cash, are guaranteeing, obviously, an inflation adjusted loss. But, it takes a lot to be in this market. I mean, it's a volatile market. But the antidote to that is long-term investing and being in the right themes and hedging portfolios against the risks and the worries, but pointing it towards, what's working.
Yeah, it is a, I don't want to say treacherous, but tricky, perhaps, is the word, market, Joanne, particularly when you think, if we're already thinking that the chances of a soft landing have increased. I'm not saying that they're, 100%, but they've increased with the softer than expected CPI print yesterday. We haven't even seen the full effects of the Fed's most recent 150 basis point hikes. I mean, that's not going to happen for months. So once that hits, a byproduct of that should theoretically be higher unemployment and lower asset prices. So what sort of environment are we in at this moment? And when you start to look forward, doesn't it get even more treacherous?
Melissa, putting on my economist hat for a moment, it is clear that the Fed's actions take a long time to play through the economy. And there's still a lot of uncertainty about the supply chain bottlenecks coming out of the pandemic and other shocks that have hit the economy, how quickly that inflation number will come down. Clearly, the recent print was a positive for that. But, whether or not we actually get more unemployment and how high it goes still is very much uncertain. We're in a really unprecedented type of shock to the global economy. So it's a little bit hard to tell. So for investors, I agree that, if you're a long-term investor, you want to be in the stock market. But I think there are ways to build in some resiliency to the portfolios. Look for some income-oriented positions, for example, that will do well even if rates go up more than expected, right? That will do well even if we do get a recession. So I think it's important to have a portfolio that is inclusive of both some growth names that have like the cloud-oriented, data center-oriented, which we know will likely grow even if there's a recession, but also to have some positions that will offer some income, whether it's the bank stocks, whether it's some of the real estate companies, that'll give some resilience to the portfolio, or a McDonald's, for example, which will do well really in any cyclical environment. So, I think it's important for investors not to get too complacent about where the economy might go, because I think there are certainly more rate hikes ahead, and the Fed is unlikely to back off just because inflation starts to go down, which they expect it to do. But they're going to need to see a lot of data before they reverse course. Right. And I think investors need to really recognize that and make sure to add some positions in their portfolio for resiliency, or to look at things that have gotten particularly cheap, whether it's small mid-cap names where we have a strategy dedicated to that, or even looking internationally to build in some international diversification of the portfolio. And so, we have opportunities for that as well. So It's important, I think, to have a very diversified portfolio, build in some resiliency, because it's very uncertain. There are a lot of debates right now going on about how much unemployment will need to rise as that Fed gets the inflation situation under control.
Shepard Smith here. Thanks for watching CNBC on YouTube.